The SEC just approved 11 separate Bitcoin Spot ETFs to begin trading as of November 10th, 2024. And this is a very historic event for the cryptocurrency space because this has never been done before. There have been derivative-based ETF that can simulate the price of a Bitcoin, but never before has there been Bitcoin ETFs that can own the ETF directly. And starting in a few hours when the market starts trading, it's kind of late now, it's like 1 a.m. as I'm researching this, there's going to be a lot of interest in this particular product space, and there's going to be a lot of choices. But I definitely think there are some that are better than the others. And another big risk that I'm trying to avoid is buying an ETF where the fund company doesn't have the ability to keep it open for the long term. That's going to be the biggest risk for long-term investors. So I'm going to talk about the expense ratio, the fee waivers that are included, assets under management of the parent company, and then talk about who they custody with. Then once I'm done discussing the facts, I will discuss my opinion of which are the ETFs that I think are best structured in terms of combination of costs, in terms of firm commitment, assets under management, and also which are the ones that I think would be best to avoid. But keep in mind, this is not an investment recommendation. This is purely for educational purposes only. Bitcoin is a cryptocurrency and it's still highly volatile. And people who don't have the right expectations are going to lose money, no matter what ETF they buy. So make sure you do your own due diligence and work with a certified financial planner who understands your personal circumstances to see if including Bitcoin or cryptocurrency-based ETF into your investment mix is an appropriate choice. So we'll start by going over the 11 ETFs that are out there now that are going to be trading as of November 11th, 2024. So we have Blackrock, who owns iShares, Bitcoin Trust, ARK, 21 share Bitcoin ETF, WisdomTree Bitcoin Fund, Invesco Galaxy Bitcoin ETF, Bitwise Bitcoin ETF, VanEck Bitcoin Trust, Franklin Bitcoin ETF, Fidelity Wise Origin Bitcoin Trust, Valkyrie Bitcoin Fund, Grayscale Bitcoin Fund, and HashDex Bitcoin ETF. The ticker symbol are on the right-hand side. So now let's talk about the expense ratio. I have everything pulled up here, and I'm going to sort it by the lowest to the highest cost. You'll see a wide gamut, starting as low as 0.20% from Bitwise, all the way up to 1.5% from Grayscale. And in the end, they're all owning Bitcoin. And so for long-term investors, the most important thing is, first of all, the viability of the ETF itself, whether the parent company is going to keep it open. I'll discuss that later. And then the expense ratio, because a very simplistic view of what the projected return is going to be whatever the return of the Bitcoin that they own, and you subtract the expense ratio. A low-cost fund is going to be a very good start. Bitwise is at 0.2, ARK is 0.21, iShares is at 0.25, VanEck at 0.25, Fidelity 0.25 again, Franklin at 0.29, a little higher, WisdomTree very similar at 0.3. Then we get into the higher cost ones. Invesco is 0.59, Valkyrie at 0.8, HashDex at 0.94, Grayscale, Bitcoin Trust at 1.5%. And some have fee waivers, some don't. So for these funds from Bitwise, Fidelity, WisdomTree, Invesco, ARK, you're basically paying 0% fees for the first 6 months. Some firms have some kind of asset limit where they're not going to charge you a fee only for the first billion or first 5 billion. And for ARK, they have a 0% fee for the first 6 months or until $1 billion in asset under management, whichever comes first. Blackrock has a fee waiver for the first 12 months, where instead of charging 0.25%, they're going to be charging 0.12 for the first 5 billion. If they grow to over $5 billion in asset under management in the first 12 months, they're still going to charge 0.12% in expense ratio for the first 5 billion. Anything over is going to be 0.25. Then once the 12-month fee waiver finishes, starting in January 11th, 2025, they're going to, bill their full 0.25% fee. And then VanEck, Franklin, Valkyrie, Hashdex, and Grayscale have no fee waivers. If you just ignore the fee waiver and look at the long-term cost of owning it, then you have 7 that are hovering about the 0.2 to 0.3%. At that price difference, I think it's going to be more important to evaluate something else like asset under management or firm commitment. And you get some fairly expensive ones from Invesco, Valkyrie, and Hashdex, and then Grayscale. Grayscale is the most expensive by far, but there's a reason why they're so expensive. So I'll talk about that later. I found the prices for some of the ETFs on their website, and I just want to make a quick warning here. You're going to see some ETFs that are trading cheaper in a lower cost compared to others. So iShares is around 20, and then VanEck is going to trade starting about $50. But don't make that mistake of thinking that because iShares is lower price, it's a better value. It's not, because they all own the same Bitcoin. They just own it in different proportions in each share. It's going to be the exact same thing. It's like the difference between buying a gallon jug of milk versus a quart size jug of milk. It's still the same milk. So next, I want to compare the scale of the various ETFs. How much is invested in the ETF is kind of hard to find. These aren't being traded yet. And I had to go into the Form S1 that was filed with the SEC and also look at the prospectus if it's available to find this information. So, give a like and subscribe if you want to show some appreciation. So let's rank from the asset under management of the particular ETF. So these are the seed money. There aren't outside investors that are investing into this fund yet, except for one exception. And most of these are the company itself finding investors that want to participate in this to help start the fund. And the larger the better, because the more assets there are in a particular ETF, the higher the fee that the company is earning from the expense ratio, and the more stable this particular fund can be. And again, I want to stress the importance of finding a ETF that has long-term viability, because if you're a long-term investor, and let's say you were fortunate and you started with $100,000 of seed investment from your own, and it grew to $200,000, there's $100,000 of unrealized capital gains. And if all of a sudden the fund that you buy is going to shut down, you're going to be forced to realize the capital gain because it's a sale. So you want to find a ETF and a parent company that have some kind of size behind them. So when you look at the scale of when you look at the asset under management for a particular ETF, a clear winner here so far is Grayscale ETFs. And the reason is because they've been running this particular investment trust for a long time now. And they got approval by the SEC to convert this publicly traded investment trust to become an ETF. And so they're coming out of the gate with a tremendous amount of assets, $28 billion. There's very little risk of closure. And keep in mind, they're earning 1.5%. And the reason why they can come out of the gate with 1.5% in fees is because they already have such established numbers. And many of their investors are not going to jump ship just because an ETF elsewhere is charging a lower cost, because there are some reasons to do that. One is liquidity. They have the most amount of assets invested in it. So that means it's very easy to get in and out as an institutional investor. So that's one attractive thing about it. Every single ETF is actually a new ETF that has never been traded before. And so VanEck seems to be showing a large commitment by having such a significant amount of money to seed the investment, $72 million. Fidelity, Blackrock, and ARK all have $20 to $10 million. Hashdex Bitcoin ETF was originally a futures-based ETF, and it has been trading for a while. And the $4.9 million is from their history of being an established fund. This is actually fairly low. If they don't grow beyond this, I'm going to have some concern of their viability. So Invesco have about $5 million of seed money. Franklin, Bitwise, and WisdomTree all have about $2.5 million that they started with. And Valkyrie is the disappointing one here with only $525,000. So this is an incredibly small amount, and it's definitely knocked some score off of Valkyrie Bitcoin Fund as a viable long-term holding. So if you have an ETF that has a lot of assets, but the parent company actually goes under, you're still out of luck. So let's look at the parent company's asset under management. Blackrock is the largest asset manager in the world. They have $9.1 trillion that they manage across many different strategies. So Fidelity is another huge investment asset manager. They have about $4.4 trillion that they manage in various funds. Invesco and Franklin have about $1.5 trillion. There's always a risk of going down, but it's definitely much less than the other firms here. WisdomTree and VanEck are also established asset managers. They've been running strategies for a long time, investing in traditional asset classes like stocks and bonds. And they have $100 billion and $76 billion respectively. Grayscale itself has $50 billion under asset management, and they started with the Bitcoin Investment Trust. And over half of their assets are in this particular ETF now. So ARK has about $5 billion that they invest across the board. Bitwise, Valkyrie, and Hashtag all are cryptocurrency-related asset managers. They are established players that have a long history of managing other traditional assets. So Bitwise and Valkyrie both have $1 billion, but their number is from 2021 and 2022. I wasn't able to find any more recent numbers. Hashdex, they have it on their website that they manage about $570 million, a little over $500 million. So the smallest player here. So these asset managers manage the money, but they don't actually hold or custody the money, and that's the job of a custodian. And you'll see Coinbase is a very popular choice here. Fidelity is going with their own cryptocurrency custody service. VanEck uses Gemini. Hashdex uses Bitcoin Go. I don't know enough about cryptocurrency custodians to have a strong opinion about it. I do know Coinbase is the largest one out there, but again, that doesn't give me any kind of information. So unfortunately, I don't have an opinion on this. In order to help me evaluate which Bitcoin ETF is better compared to the others, I did score it on the fee, on the scale of the ETF, on the scale of the parent, and I have my opinion later on their overall commitment as well, which is a little harder to evaluate. And I give them a score, but take it with a grain of salt. But I do think through this exercise, we are going to find some that are clearly going to be bad choices over the long term. Hopefully this ages well. So I ranked all 11 of these ETFs by their total score. And again, the criteria were their ETF fee, how much is seeded into the ETF, and how much the parent company manages. This is an extremely simplistic and I would say dumb scoring model because it ignores a lot of other factors like the company's marketing commitment, and also this is a whole new world with cryptocurrency-based ETFs, and it's being custodied largely with Coinbase, and there may be risk of hack, and so that's something I do not know, and it wasn't a part of this evaluation. So definitely do your own due diligence, continue to do a ton of research. If you do invest in this, it is only after working with a financial professional who has your best interest at heart, or you're investing only a small portion of your money from a much larger and much more diversified investment mix. And also I touch on the custodian, Coinbase, that is a publicly traded company, and that you should not take this as a signal to invest in Coinbase stock either. So let's look here. We got the top two scores, Blackrock and Fidelity. They scored very similarly. They are lowish fees at 0.25 for both of them. They have seeded both of their accounts with $10 million each, and they are extremely large asset managers. So they scored very high up there. VanEck is a slightly different story. I think they win because of a huge commitment. They scored the highest in terms of the seed money, and their fee is also low. And they are also fairly established as an asset manager. Grayscale, they are extremely expensive at 1.5% in annual expense ratio, but they have $28 billion invested in this fund already. So I don't think it's going to go anywhere. So ARK is also a runner-up. They score very high because of their commitment to low fee at 0.21%. And they also have an aggressive fee waiver as well. They have seeded with $10 million, which is a decent amount of money. They score kind of low when it comes to parent stability. $5 billion, they are on the lower end of the totem pole, but low fee and also $10 million commitment, helps them score a little higher. Then you get these next three. They're kind of middle of the road. I don't think they're going to turn out terribly in terms of long-term viability. And I would also argue that among these three funds, Bitwise may accumulate a little more money compared to Invesco and Franklin, because they are the lowest fee and they have a very coordinated marketing approach to help push this product. Despite only having $2.5 million in seed money and the fact that they are an extremely small asset manager, I would give them a chance. But honestly, given the other 5 options above Bitwise, I wouldn't consider them too much. And then you get the 2 ETFs that I don't really see a reason to invest in. So the only reason why Hashtag even has a score is because they do have $5 million of seed money, and that's decent. But then they're also going to charge 0.94%. When I read through their SEC filing, I didn't see any fee waiver that they discussed. I'm not sure how they're going to compete. Even at $5 million, it's long-term, not a viable fund. Valkyrie, 0.8%, and also very low commitment numbers, $500,000. So these 2 funds, I don't recommend considering for your own investments, especially when you have much lower cost ones that have much greater scale, that trade at very thin margins. If you're going to consider, I would consider the top 5 here: the Blackrock, Fidelity, VanEck, Grayscale, and ARK. Again, this is not an investment recommendation. This is only for educational purposes only. I would hope you found it valuable, to have this information in hand before the market starts trading these Bitcoin ETFs the very first day. I hope you appreciate the effort of me putting together the information before these products start trading in a few hours. And give me a like and subscribe if you appreciated that. Thanks for watching.